This is the US debt ceiling. It's something like a gastric band on Uncle Sam's wallet. A law since 1917 that's been changed over 100 times, and today it stands at almost 32 trillion US dollars. Now what happens when Uncle Sam can't loosen this belt anymore? Can you smell the drama? So, the US hit its debt ceiling earlier this year. Now the Treasury is using everything short of a magic wand to meet payment obligations. But guess what? The magic tricks might run out by early June. Meanwhile, Capitol Hill is more like a fight club, debating whether to cut the steak or sell the silver. Why should you care? Well, if the US defaults on its debt, it's not just a bad hair day for Wall Street. It's more like Godzilla stomping on the global economy. You see, US government debt is like a gold standard for financial safety. And if that gold starts to look like tin, that's when every investor might start freaking out. Now, there's this move some folks want President Biden to pull, invoking the 14th Amendment, raising the nation's debt limit without an act of Congress. That's like a Hail Mary pass to avoid default. But is it a touchdown or just a fumble waiting to happen? Even legal experts can't agree. Alright, what do you guys think? Would you risk it and invoke the 14th? Let us know in the comments below. Meanwhile, negotiations are a bit like a knife fight in a phone booth. The Democrats want to raise the borrowing limit, no strings attached, while Republicans are saying not so fast, we've got to trim the fat. Here's the scary part. If the US can't raise its debt ceiling, we might see a default. That's when the government can't pay back its debts, like missing your credit card payments, but a zillion times worse. Yes, President Joe Biden and his Republican rivals have made a deal. They want to increase the US debt limit to prevent a default. The plan came after many tough talks. But will the Congress agree? It's split and must approve the deal. This process might not be easy. And we're running towards a tight deadline here. Some say as soon as the first half of June. Now that's less time than it takes for my avocado to ripen. Will we see a repeat of 2011's last-minute save, or is this time different? Remember, the stakes have never been higher. Now here's a head-scratcher for you all. As we find ourselves tiptoeing ever closer to a potential US debt default, a situation that could unravel the very fabric of global finance and plunge the US economy into recession, the stock market seems to be enjoying a sunny afternoon. It's as if the storm clouds gathering over Capitol Hill are a world away. The S&P 500? It's soaking up the sun with an upward curve, clocking in a gain of over 7% for the year. So what gives? Well, in the world of stock investing right now, we're staring at a binary choice. A financial toss of the coin. Heads, lawmakers pull off another last-minute deal to raise the country's borrowing limit, just like the thrilling cliffhangers of the past. Tails, Uncle Sam reneges on its obligations, unleashing a fiscal tempest with potentially catastrophic consequences. Now, these consequences are no easy beast to tame. They're so vast, so overwhelming, that they're hard for even the savviest investors to fully grasp, let alone factor into stock prices. So in this high-stakes game of chance, the market seems to be holding its breath, waiting for the coin to land. As we find ourselves on the edge of a potential fiscal cliff, it's only natural to start considering our best financial foot forward. What assets and stocks could prove more resilient or even benefit in these turbulent times? Let's have a look. Pharma companies could be our guiding lights. Their stocks may stay strong. Why? People still need medicine and healthcare services. Also, tech leaders could step up. More people could start using digital solutions. Why is that? Businesses want to save money. People might have more time on their hands. Could this mean more demand for tech? It's possible. From the beginning of time, in periods of financial instability, everyone has sought the most secure way to store their money. Switzerland has proven that no matter what, Swiss banks will always keep your money safe. Switzerland is so confident in its banks that it even guarantees to return up to 100,000 Swiss francs to every client in the event of a bank collapse. People used to think that only the super rich could afford to have a Swiss bank account, and the only way to open one was to fly to Switzerland in a private jet and meet in person with a bank manager. Well, that's not true. Not anymore. Swiss bank Dukascopy offers its services to everyone. Not only can you easily open an account fully online, but it's also absolutely free. There's no monthly fee, no minimum deposit requirements. You can enjoy an IBAN in 23 currencies, plastic and virtual cards, one-click investments, savings accounts, blockchain operations, P2P exchanges, and many other features with your Dukascopy bank account. No matter where you are, if you have your ID card or passport with you, the entire process will take about 5 minutes. Simply scan this QR code or use the link in the description. Fill out the form and then make a video call with a bank operator or scan your document with the back of your phone if it's compatible. Your Swiss bank account will be active the same day. Moving on. Now, what about the brave new world of cryptocurrencies? A US default could shake confidence in traditional financial systems and ignite interest in decentralized finance. Thus, stocks related to the crypto sector could find themselves in an upward trajectory. Short ETFs or inverse ETFs are interesting beasts. They are designed to gain value when a particular market or index decreases. These could become lucrative if the market takes a downturn due to a US debt default. In a sea of uncertainty, consumer staples and utilities may be your lighthouses. Stocks in these sectors could prove more resilient as they deal with essential goods and services. After all, people still need to eat and power their homes even amidst economic downturns. Also, let's not forget stocks of companies with robust balance sheets and minimal debt. Lastly, if history is our guide, gold and other precious metal stocks often shine brightest during economic storms. These are considered safe havens in tumultuous times, and stocks of companies mining or processing these metals could potentially become investors' favorites as they seek financial security. So with these possibilities laid out, what's your strategy in this high-stakes financial poker game? Which of these assets would you bet on? Or do you have an ace up your sleeve that we've not considered? Join the discussion below.